Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's DRSTOXX.com. We've been in business every market day since October of 2002. We've got two daily stock pick advisory letters. We've got one weekly letter, which is our most profitable service, the Momentum letter. We've got trading webinars, trading manuals, and two live rooms. This is coming to you from the live trading room. And if you want to join any of that, just go to the subscribe button, click for more info on the advisories, or if you want to join me in a group of amazing people trading at all levels of experience, from newbies to professionals and everybody in between. Click on the live trading room. You'll get more information about it. You'll get our performance record. We've got a very strong performance record in all of our services, but the rooms I'm very proud of because I'm in there trading myself. I tell you exactly what I'm buying, where I bought it, where my stop is, where I'm getting out, the reasons for the trade. It's like if you wanted to watch a guy who trades for a living and look over his shoulder to see what he's doing, that's the live trading room. And you want to add on, if you want to add on the options room, only long calls and puts and all levels of experience are welcome, then you can do that at a 40% discount. All right, I'm running out of time today. I'm trying to do this quickly. Huge data dump coming tomorrow. So today is the 27th of January. It's a Tuesday. Tomorrow we get some minor economic data in the morning, but then we get 2 o'clock FOMC, Jay Powell, presser, questions. He's probably going to say stuff that the market doesn't exactly want to hear. And then we get the reaction of the market to all of that. That's going to be a biggie. We're not going to get a rate cut. We're probably not going to get a rate cut until he retires in May. But is he going to flag like the willingness to cut rates if they need to? Are we going to see the dot plot shift toward more of a dovish posture? It was a bit more on the hawkish side last time, and it has been for a while. Or are we going to get something that's just kind of confusing and the market doesn't know how to react? That could also happen. Now, after that, bell rings at 4 p.m. and then we get, I think it's Microsoft, Facebook, Tesla. Apple is somewhere in the mix. But anyway, we get 4 at least tomorrow, if not Thursday, of the big mag stocks. And that it will also, I think that's going to set the tone over the next 2 or 3 weeks. Are we going to see more CapEx spend, shrinking margins, and a bit of uncertainty about future profits? That's probably the case. That's kind of where I think we're going. But has the market already priced that in? Facebook, Microsoft, those guys have really been knocked down. Amazon's doing fine. Google's doing fine, but Apple is not. So are we going to see more of the same, or are we going to see, kind of a big sigh of relief in the market and all those guys rally back up again? We don't know, and we won't know until we get there. So I've been saying, by the time we get to around this time tomorrow, and let's even push it out a little further, by the time we get to Thursday morning, we will know a lot more about the market than we know right now. Now, all that said, there are some really nice stocks that are setting up in a strong technical way. They've got good fundamentals as well, most of them. And I'm going to show you those in just a minute. But let me just say a few words quickly about the indexes. And everything that I'm going to say now is probably not going to matter tomorrow, because we're going to get all kinds of market input that has nothing to do with the technicals. It's all about the fundamental, the macro picture we're trading against. But let me just say that the market has been a lot more bullish the last several trading sessions than I expected it to be. When we had this big break of the supporting trend line, big red stick, heavy volume, lots of distribution, we started to put on some hedges, which is to say some inverse funds or some puts, and to protect ourselves against what looked like the beginning of a pretty serious pullback in the market. Well, we didn't get it at all. It corrected the very next day. We recovered all of it the day after that, and we've just been higher ever since. Now we're banging up on resistance, right up here against resistance. There's no divergence here, bearish divergence at this level. That's a good thing. Volume coming into this level is tapering off, but that's to be expected given that not only are we coming up against resistance, but we're also coming up against a lot of uncertainty tomorrow. And I think the market's just kind of looking pretty good, a lot better than I thought. So, we bailed out of one hedge at the stop. We are still holding another, but we've lowered that stop quite a bit. And in the other room, we've got puts, but we've actually got puts into two indexes that are looking kind of weak. So they're doing better. But all that said, again, we could be in a very different kind of market tomorrow. I still do think that we're going to get a sizable correction, pullback, consolidation going into February, maybe into early March. Not just because we're due that, but because I don't think the market is really fully priced in some realities that are beginning to show up in things like the price of gold and the price of silver and the crashing dollar and the lack of confidence in the American economy by Europe and China issues and more tariffs from Trump. And, the list of concerns grows every day, and that's fine. The market trades against a wall of worry all the time, but we just want to make sure that we're not getting heavy long right at the top of what could be a pretty serious pullback. So we're just being cautious, but all of that said, there are some really nice setups I'll show you in a minute. NASDAQ is pretty much the same story, right up against the same line, much stronger than I expected. Really good volume coming in. It's tapering off, but that's to be expected. And again, we'll see. Both of these guys, the S&P and the NASDAQ, are set up to break out and just keep going higher, technically speaking. But fundamentally, with the macro picture and with the Fed, all bets are off, right? Tomorrow's the big day. Now, the small cap index has been weak, right? Here's the big flash, and this was a day the market was up, the small caps were down, and it was down further even yesterday. And today is just a little smidge of a green day, but not much. This doesn't look very good. And if we were to go down to let's say the 2-hour chart, and we were to look at this trend line a little more carefully, let's be conservative. We'll put it right there, right? Which lines up with that cluster, this cluster, and there's the break and there's the retest. And now we're just kind of still trailing lower. The small cap index, which often can lead the rest of the market because it's the canary in the coal mine for risk on. And if the market's not happy with risk on, it's going to go to risk off. And then you're not going to see the NASDAQ do so well. The NASDAQ is being propped up by the big Mag 7 for the most part. It hasn't been a broad-based distribution of gains. If you're looking at shares up and shares down across the big board or the S&P 500 stocks, you're going to see it's pretty well mixed, right? About 50-50. 50% stocks up, 50% stocks down. So nothing wrong with that necessarily, but we've seen this a lot before, where the big blue chip tech stocks are pretty much leading the market higher, and a lot of everything else is kind of floundering. And we'll trade with that, and we go with the market leaders, and we trade the greatest setups in the strongest stocks. But it doesn't always make it easy. You have to be very, very selective. Okay, so a little bit of a cautionary note. The S&P looks great. The NASDAQ looks great. The small caps, not so great. I'm not going to say they look horrible. They don't. But just that there is that little bit of note here that they have not recovered back up to the highs, and they're still below. Now, resistance used to be support, now it's resistance. Okay, let's take a quick look at Bitcoin. I do think Bitcoin has a good run coming. I don't think we're quite ready to go long just yet, and it's got a lot of overhead. Let me just get rid of all this stuff here. So there is a line, and I don't think this line is the line, but there is a line right there that broke and tested, and now we're still falling below it and even lower now than we were. We have to get up through this little cluster. We've got another volume shelf right there. We've got all these range highs. That area right there around 90,000, 90 to 91,000 is going to be a tough hurdle to get over. If it gets up and over, let's say 91.5, gets up to 91.5, where is that? That's Right about there. Okay, so it gets up to that level, right, up into the blue zone of the LRC, and holds that level and closes at that level, then we might be ready to go long. If it stays down at this current level for a few more days and it doesn't go any lower, and we start to see some bullish things happening on maybe the hourly chart, 2 hour chart, we can also go long there. But I think your best approach is going to be just to kind of nibble into a position, not by a whole bunch. I'm not calling for the bottom of Bitcoin, but I do think we've got a good swing trade setting up. Ether, I think Ether could be bought today, frankly. I really do. I think yesterday and today is the flush out and then the bounce back. And I think probably for the next couple of weeks, you're going to see a decent technical bounce in Ether. Not that it's going to get all that high, but maybe up here to 3,400, 3,300. That's the key. That's the line. It's not going to get any higher than that, I don't think, for quite some time. But a bounce back up to that level, I would take even a bounce up to 3,200, the 200 period moving average, as a tradable bounce. But I think with Bitcoin, for different reasons, won't go into more of a macro picture here, that Bitcoin should have the more sizable bounce. But I think Ether's ready to go now. Bitcoin still needs a few more days. All right. Gold is back up to green. It was a gap down and a rally up, and that's just what bullish things do. And gold is very, very bullish. I have been saying that I think gold will cool off. I think it's probably already started that cooling off period. And maybe this is, the top of the range for a little while, a week, maybe. So maybe that's the range. Maybe the range actually comes a little bit lower, like there fills that little gap right there. But I don't think we're going to get much of a pullback in gold. And I don't think we're going to get anything like a rocket ship higher over the next week or two. The market is, I think, going to, probably cool off toward the metals, not bearish. I wouldn't short it. I wouldn't, in fact, if I'm long metals and miners, I sold a little bit of it this morning, but I don't think I would. I really want to stay in most of that. I'm just going to kind of look for the alpha gains somewhere else for now, but it's just a short period of consolidation. And I see pretty much the same thing for silver, right? Silver's been doing this. It goes sideways 4 or 5 days. It pulls back for 4 or 5 days. It goes sideways for 4 or 5 days. And I think, today's Tuesday. Friday was a big, it's not a capitulation top, but it is a big, it's not a blow-off top, not a capitulation top, but it is one of those days where everybody that wanted to buy silver has already bought silver, and then the next day it gapped down quite a lot. In fact, it started selling off that night, continued selling off the next morning. It got kind of scary low in between the sessions, if you were watching the futures, and then rallied back up, and it's been doing pretty well today. Silver itself got back up to 114. I think it'll probably stay above 100. I don't think you're going to see much below 100 for maybe months. I could be wrong, totally wrong. I'm long silver, so I'm kind of speaking my trade here. But I do think that we're just going to see a little bit of a consolidation, and then probably this level right here, 102. Maybe you see some flush outs overnight, but I think during the trading day, 102 is going to be your low, and you're not going to get too much higher than 110, 112 for a little while, 4 or 5 days, and then boom, right back up again. That's my path of least resistance. So we did a little nibbling on KOLD, and this contract is not really the best way to track. This one is. Okay, so we have a sell signal on natural gas. It came up to a SNR flip, support resistance flip, and it held yesterday. It held again on a test this morning. Our little position is just a little nibble in KOLD, and it's underwater, so we didn't get the timing just right, but I think the next move for natural gas will be to the downside. Especially now that we're kind of in the thick of this storm, right? It's by the rumor of the storm, and then when the storm hits, you sell the news. I think that's the trade, but it's just a fun little money trade. It's not something you put a lot of money into. If you want to follow us, don't go crazy. Okay, those are the indexes. I just want to take a quick look at banks because I have been talking about this pullback in banks. It's quite sizable. They are now at a position where they're looking at some pretty serious undervaluation and serious lack of momentum, and the selling pressure has really backed off a lot. So if you look at the individual bank, JP Morgan, Bank of America, Wells Fargo, Citicorp, and on and on, Goldman Sachs, Morgan Stanley, you're going to see that the volume is really starting to dry up, and they're starting to come into, in some cases, places of support. They're holding there, and they're just kind of not doing a whole lot. So I do think that that's the sign that it's building a bottom or a bullish base, and then we can, from here, not necessarily today, not necessarily tomorrow, but maybe in the next 3 or 4 days, we can get long something like FAS or some XLF calls, and that should be a pretty decent trade. All right. Let's take a quick look at the mags, which I really haven't looked at for a while as a group. I have a few non-mags in here. I would stay away from PLTR. It's not looking good, right? It keeps breaking support. Now, I do think that maybe in a week or two, it's going to have a nice bounce back. It's not going anywhere, but this is a bearish setup, and you don't want to be long. You've also got earnings coming up. Now, it could go crazy up on earnings. Let's see what it did last time. It was good, but the market didn't like it, and this one was good and the market did like it. So kind of a mixed bag on earnings, but just technically this is something you don't want to trade. I think Tesla probably is going to fall on earnings. It usually does, and it looks to me like it's already falling. I have a little nibble in TSLQ. I'm not sure I'll hold it over into the earnings report itself, but it's just a little fun money trade, just what I call a footprint trade, right? I just want to put my footprint in there, so I'm interested to follow the chart. And if it's something that kind of plays out nicely the way I think it is, then I usually make it an official trade in one of the two rooms. But we're not there yet with Tesla, and I don't think we'll get there until after the earnings. Netflix just keeps going lower. It's just a total avoid. I don't know what's going on with Qualcomm. We actually have Qualcomm calls, which we bought down in this little cluster down here, thinking that was a bottom base. But we may, I don't usually like to do this, but we may just hold them over earnings because, when you buy calls, of course, you're only risking the amount of premium. And so your risk is capped. So you might as well, right? If you're holding shares over earnings, not such a good idea, but holding calls over earnings, and if you've been in them for a little while and they're not really doing all that well, you might as well, as a kind of a last-ditch effort, to see them go higher. But we might also just get stopped out on those. The options room has just been on fire, absolutely on fire. But this has been one of our stinkier trades lately. We just sold a profit on Facebook in the live trading room because of this nice rally back up off those deep cut lows. It's not a good looking chart. It's a deep, sharp downtrend, but of course anything can happen tomorrow night on earnings. I like AMD, but it got up right to where we thought it would, and it has reversed. We were in calls in the options room, took a beautiful profit, one of our best, on this nice run all the way up. We didn't go all the way to the top, but we got close to it. And I'm glad we didn't hold the top because it would have been a hard decision to sell up there. And now it's only come down further. I would wait until after earnings on AMD, but AMD technically and fundamentally should be higher in a month or two. Google's doing great. It's actually really, really great. This is a nice bullish consolidation pattern. You can see it consolidates and then breaks out, and it's just a nice, soft, easy going uptrend. No major dips, no major rips. It's just beautiful to watch. And that's the sign of a healthy company, a healthy stock, a good, longish term swing trading stock. And yeah, you can play this with GGLL. Earnings, I don't know. I don't know its record on earnings. There's kind of a a big up, but then a sideways for a couple of weeks. So one of the problems with earnings, yeah, you can get a rip on the day, but then it can go sideways and you're just in dead money for a couple of weeks when you could be making, alpha with that same cash. Nvidia. So Nvidia is coming into some heavy resistance right in this area, maybe up to 192. And I don't think the market's all that excited about Nvidia's earnings because you'd kind of think that with the other mags not doing all that well, most of them, people would get real excited about Nvidia, but they're not. It's just been in this really tight range, and if you cut out that low there, it is a very tight range, like a 10-point range, and Nvidia doesn't do that very often. And the prior trend to that was down. So technically speaking, it's just it's got potential to break out. This a little, you could call it a bull flag, I guess, or a little sideways pennant or something. It could break out to the upside, but there are just better setups out there, and I'll show you a few. Apple's bouncing back nicely, but it's probably a dead cat bounce. I don't trust it on earnings. I never trust Apple, Tesla. There was a third stock. Those are the two mags I just don't trust on earnings. Avgo is bouncing also kind of like, this is what Qualcomm should be doing, but hasn't yet. Amazon looks great. So look, Amazon, nice run up, back down again, a higher low, and now running sharply back higher. Volume bounce is a little bit mixed, but the stochastics are about to flip a buy signal. The MACD is flipping a buy signal. Those look pretty good. Microsoft, I don't know. It's coming right up into the 200. It looks a bit overbought. It's in a downtrend. Technically speaking, it wouldn't be a buy here at all, but anything can happen tomorrow night. All right, that's it. So let me show you some of my greens. And while I'm doing this, yeah, we're doing okay on time. So over in the trading main room, let me move this over so I can see it. Over in the trading main room, you can start typing in some ticker symbols, and I'll take a look at some of those. I probably won't get to all of them. All right. 5 is a retail play. There are some good retail plays out there. TJ Maxx is one I like. What was the other one? There was something else, but 5 is good, right? High growth, good margins, and a strong chart. However, it hasn't given us a buy signal yet. So I just have it on my list. We're just kind of waiting for it to get a little more greeny. And while it's not doing that, we are seeing some distribution in here. So it's not a perfect setup. I just kind of nibbled on this one today. I don't really know it that well, but this is a, if I'm right in remembering, because I looked at several stocks today, this is a chain of urgent care facilities. The EPS, the market surge metrics for this one are excellent. Really, it's a 99 comp. It's a 99 relative strength. It's got good EPS, and it is showing a nice pullback. We had a reversal bar yesterday. Just hasn't done any follow through yet today. So keep an eye on this one. It's not a buy just yet, but it is forming a nice looking pullback into the rising 50. NTRA is a biomed company. This is one of those that has a strong uptrend. It's been in kind of a sideways mode for a while. And in a sideways mode stock like this, don't buy it up here near the top. Try to get it down here near that line or the 50 or the pink zone, some kind of level of support. So it's not ready to go today, but I'm just watching it. GMed looks like it's ready to break out to the upside. Real, don't know this one, but nice green reversal bar yesterday. Not a whole lot of follow through yet today. ADFT is already in breakout mode. It's holding that level quite nicely, and now it's printing a new 30-day, 40-day range. CRML, we bought a little bit of this, just a little playful nibble in shares following a report that a lot of call flow coming in for CRML, and I showed the room that call flow because it was pretty substantial and it's been going on for several days now. It's kind of up in a new uptrend here. Pretty sustainable uptrend, right? Nothing too major. And we could have gotten a little bit better price down here under 17 this morning, but that's not when I saw it. I saw it up here just above 18. And that's where I'm at with that one. IONS, one of my favorite biotech plays, is in a short little pullback off the 50. Breakout mode, took a couple of days to get going. Today it looks like it's ready to continue higher. FIGR is a, what is it? I just looked. Oh, it's a disruptor play in the lending space. And they've got a very good business model where they sell subscriptions, they sell licenses, they take a cut of every loan that comes through their software platform, and they've got a lot of big clients. So this is an IPO. I don't think it's profitable yet, but it's one of those, up and coming companies. So I like it. I like this little pullback. It just kind of waiting for more volume to come in. Let me just go down here. COGT looks like it's ready to break out. It tested the resistance line, hasn't gotten the courage yet to jump over that line. So keep an eye on that one. This was my free pick for this week. CORZ, we just mentioned, got an alpha gold alert, and you can see why. It's just up, 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 up. And I have a little nibble in the leveraged fund for CORZ, which we bought down in this area here. It's been a bit of a, I bought down here, and then I got stopped out on Friday last week, and then I jumped back in Friday afternoon. I had to pay up to do that, but I did. Now I'm glad I did. VRT, we're in some calls in the options room. We've been very patiently holding those from down in this area here. We had the breakout, we had the retest, and now it looks like it's ready to rumble higher. The pattern target would put price up about 215, and it's down here at 189. So that's a nice move if you got calls. We just bought some Rocket Lab in the live trading room this morning, and it's been up since then, and it looks like just a little bit of a pullback, and it's ready to break out to the upside. We took a stop out yesterday on that big red bar in NBIS because it went up really nicely early, bought it, came all the way back down to hit our stop the same day. So we're not going to get back into NBIS anytime real soon, but I do think that this inside bar off of the 50, decent volume coming in, the cycles and the stochastics are all where you would want them to be, shows that NBIS could potentially get back on track. So 110 would be your first target, and then 130 the second. We had a little stop out yesterday with BE, and it's right back up again. That happens in trading. I have a very low risk profile, so I put my stops pretty tight. I like to raise them quickly, and that was probably the wrong strategy for this one. A little more volatility intraday than I anticipated, but this looks very good. This is a very good setup right here. Very bullish. Here's a uranium play. That whole group, UUUU and LEU and all those guys have been not so good lately. This one is doing really well today, but with all these kind of growth names and AI DC names, it tends to be one green up, red down, green up, red down, green up, red down, like a piano, right? All the way across, they're just not making any progress. So keep an eye on this one. I do think that eventually, because of the energy demand for AI, they've got to start looking to nuclear, and there's several that are in good position. IREN is another energy supplier for data centers and quantum computing, and again, here's your nice little bullish base right there, and a nice big green stick testing the range highs today. Yeah, you could buy this one. Okay, that's all I've got, guys. Let me see what you're interested in. I do see a few. Take a look at TTD. This is a trade desk. Avoid abandoned ship. And don't even throw out a life preserver for that one, because no one should be in that one. I've talked about this for quite a while, because it used to be way back when it was a big momentum stock. And I don't know when that was. That was a long time ago when it was way back up here, up above $100 a share. it was a fun stock to trade, and it has a great business model and new clients and a lot of good growth. And then everything just kind of collapsed. I don't know, too much competition. I don't know. It's been an avoid ever since. And here's a good tip, by the way. When you crack that big on earnings, it can take months or years to overcome that kind of negative downward momentum. For one, investors are going to get scared out. Number two, uh, who wants to buy something with all of that overhead resistance? And yeah, so just move on, take it off your watch list, and look for something else. All right, let's take a look at RKT. I did have this on my greens list a while ago. Yeah, I think it was on the greens list for this little cup, and that nice big breakout stick right there, and it went off quite nicely, and then it gapped down, and that's not a good thing. So when a stock gets up to 52-week highs, I'm not sure if that is. Yeah, it looks like it. 52-week highs or all-time highs, hits that, and then gaps down the next day, as it did right here. And then the day after that, it trails below the low of the gap down day. That's a bearish sell signal. And yeah, to me, it's a deal killer. And it's not that it can't go back up. We've seen that happen quite a bit. It gaps down on something that wasn't really that material or some, I don't know what. But that's a pattern that typically precipitates more downside. So it's not a buy right here. I would just let it go. Okay. Net Flare, Cloudflare, right? This is a used to be kind of like Trade Desk. Used to be one of my favorites in the cybersecurity space, and I had it in like my top 5 for a while, and then it just started to not do so well, although it looks like it's doing a lot better than it used to. Yeah, actually now, okay, it was that big up on earnings, and then it came way down. That's never good. When you gap up on earnings, that's good. But if it closes that gap, that's maybe even worse than if the market had just gapped down from the start. But it just kept climbing higher. That's good. Here's another gap up on earnings that also shut down. And now I know the last couple of days I saw that I think they've got a new product line coming out and the market likes it. And so there's some good stuff going on. Okay, so you're up here. You're not quite above that pivot high, and that's going to be your mark. You want to see a close above that pivot high. I have a trading system called the Blue Sky Breakout. It's in my first book. You can read about it. And it looks at volume balance and a 40-day high, price high. You put those two things together and you've got what's called a blue sky breakout, and those typically run higher for a while. So this is potentially there, but not quite. So wait on that. Yeah, we did CRML, XBI, which is oh, this looks good actually. This is the biotech index, non-leveraged. And Labu, I think, has a little slightly different set of stocks, but there's a lot of overlap between XBI and Labu. And Labu is the one we like to trade usually when the biotechs get hot. And this looks good. This is the kind of chart I really like. So uptrend, right? The uptrend's clear. I don't have the 20 on here, but I'm sure the 20 is above the 50. The 50 is above the 200. They're all rising. We've got a nice congestion underneath the resistance high right here, and then a breakout, and then a pullback to retest. And yeah, oh, it's perfect. It's just classic textbook uptrending action. Now, where would you buy something like this? There are a couple of places you could buy. I like to buy under the line when it clusters like this, especially when you see a big green day like that on good volume, right? I mean, that's a potential breakout day. But that it could be a buy signal, and then a little bit over here where it gapped down and rallied back up on good volume, that's a buy signal. Follows through the next day and breaks out, that's a buy signal. Coming back in to test it again, you could buy right there also. And it hasn't gotten much further than that today. So the buy signal here is still fresh. And I suspect, you're going to have to sit through maybe some choppy sideways action like this once it gets up to some new prices. But that's just how the market works. It goes up quickly, comes down quickly and then chops around for a while and then goes up and comes down and chops, right? But usually the ups are bigger than the downs, right? That's an uptrending market. If the downs are bigger than the ups, it's a downtrending market. It just can be very simple sometimes, but you got to know the rules and you got to follow them. All right, one more. Let's see. Let me do one more. PL, that was one of my favorites. We had a nice trade in that one, and it still looks good. Yeah, it still looks very good. This is a an aerospace defense kind of meteorological play. They go up into space with satellites and they take pictures of the Earth, and then they have an AI give you the readout of the weather and climate differences and so on. And they're probably very active right now with all this big storm going on. And this is a great chart, really, really good chart. So strong uptrend, obviously got a little bit too toppy there with his topping tails, 3 topping tails in a row, a big red stick down on pretty heavy volume just to scare everybody out of it. And then it went flat around 26 for 3 days in a row. And now right back up again. You're seeing a lot of these stocks that are kind of growth names that have been flat or even downtrending are doing really well today. We saw a bunch of them in my list, and this is one of them. In fact, I like this so much I'm going to add it, and I'm going to add XBI as well. And yeah, that's very good. So obviously the better place to buy it would have been in one of these dips down here to 26, and now it's up to 28 and change. But to me, this looks like this was a temporary top, and now you're about to surpass it. Maybe you get up to the low mid 30s before it flattens out again. But this looks very good. You'd put a stop below those lows. 24.8 would be your stop. That's a wide stop, so you have to go small into that and or use some calls if you want. No, that's a good one. And then let me just do one more because I'm interested in this name, AVAV. Yeah, okay. This is on and off the IBD leaderboard, which means that it's got great growth, it's got good sales, good margins, good management, and it got up here, right? And then it just started doing this ABC pullback, and is that a buy? No. Is this reversal at the 50 a buy? Sure. And then nothing played out, and it came all the way back down to the 200 period moving average, even tipping the LRC into a slight downtrend, and it just kind of came off the radar, right? And it did this big thing. I don't know why it did that. Maybe some government contracts, or I forget kind of what this is in. And then it got whacked again on heavy volume, big selling pressure. And now it's doing this little fake out thing, little tiny green bar on small volume, and I'm not going to fall for it. So I would say that while it looks very tempting right here, the gap down is not good. The lower high is not good. And the fact that it can just do these nice little enticing bull traps to pull you in looks like to me this is another one of those. So I would just kind of take it off your radar for a while, let it sort itself out, let it build a base above the 50 period moving average, something like a symmetrical triangle or an ascending triangle, or I'm not sure what else would look good, a falling wedge maybe. But then let it break out of that, and that's where you can buy it. All right, guys, God bless. I'm going to record the video or produce it, put a link in the rooms, and then we'll get back to trading. We've got an hour and 10 minutes left. God bless. Bye for now.